What's up, everybody? Michael Silva here. You're watching the Stock Market Brief Show. Is the stock market heading lower? Is cryptocurrencies, Bitcoin, heading lower? We're going to do a deeper dive into some crypto charts, Bitcoin specifically, in today's market brief. We're going to keep it quick and to the point, so let's just go ahead and get right into it. All right, before we hop into the crypto charts, we're going to take a look at the 11 sectors that were performing today in the S&P 500. Energy led the way, up almost 3%. Healthcare, consumer staples, utilities. We have another defensive type day taking place. As you can see, the three horsemen: financials, technology, and consumer discretionary, all down there at the bottom. When these are all down here at the bottom, it is very hard for the indices to have a strong day. And by the bottom, I mean in the red, right? If they're all in the green, but down here, the market would obviously be up. But overall, pretty flat day in the markets. This could be in anticipation for waiting for Jerome Powell to talk tomorrow, right? So Jerome Powell's going to be out. Chances are it's going to be hawkish as usual sounding, which might not be that great on the markets. And then also, I believe Bullard's going to be talking too as well. What did the S&P 500 do today? It didn't do much. So that's why today's video is going to be a little bit more quick, and we're going to show some more charts on Bitcoin. But you can see an indecision type candle. What's an indecision candle? Okay, well, this wick here is the buyers and sellers, and you can see the little middle piece right there. That is the open and the close. So you can see we opened and we closed in pretty much the same area, which tells me intraday, all we did was this, right? And if you're looking at the intraday charts, which I'll show you here soon, right, we didn't go anywhere. And you can see the range of volatility that's still being priced in for this week is still rather big. So what can we expect? Well, if we start taking out the high of today, I think we can head higher. If we start taking out the low, right, we can head lower to the lower range. So we got to see which way this breaks. As it stands right now, we had a higher high and a higher low. So it's not horrible as of this particular moment. And you can really see that when you zoom in on the 15-minute time frame. You can see here, day 1, 2, 3, 4, 5. Okay, so when tomorrow comes, this day will knock off. And what I'm talking about here is the 5-day moving average. So once we get this data off, it's going to start flattening out this a little bit more. So as long as we can hold this up above the 5-day moving average for a couple more days here, that's going to really flatten it out and potentially start moving it up as the price action continues to go up, if that's the case. But as it stands now, it is still holding as support, and it's been a couple of days, so we haven't seen that type of progress in a little while here. So that is a positive development. So we will see. If we start taking out 405, I think that opens the door to fill this gap and potentially hit that 415 level, which I am watching for. If we take a look at the Qs, inside trading day. What's an inside trading day? It means when the price just played around between the high and the low of the previous trading day. So what can we expect tomorrow, right? It was down 1.16%, right? A little bit down, but still relatively, it's not a bad move, right? So we had 1 day here, 2 day, that's like a follow through day. And now we're pausing. So as long as we don't take out the low here, it could be trying to build out some sort of a bottom, but we'll see, right? We just got to be prepared for both sides. If we have a quick hit to the upside, I'm still looking for taking profits and also looking for short positions in individual stocks. Inside trading day, if we start breaking above the high, look for movement more to the upside. If we start breaking below the low, start looking for a move more towards the downside. If you take a look at the 15-minute time frame, we are above that 5-day moving average. It is holding as support 1, 2, 3, 4, 5 times. So, and it closed basically right on it here. So we got to get back above, I'd say, 305, and that could open the door to fill this gap above us and potentially head to 315 there for the Qs on that 15-minute time frame. But as I've been stating here, if we take a look at 1, 2, 3, 4, 5 days here, this day is going to get whacked out, which means this is going to start flattening out a little bit more as long as the price action could stay above, and we could start potentially trying to get this into an inclining 5-day moving average, because as it stands right now, it's still declining at this particular point in time. So we've got to be careful. Take a look at the Qs really quick. Qs also, I can't really tell if that's an inside trading day. It looks like an inside trading day, but indecision still across the board, across the indexes, right? I'm sure that when Jerome Powell comes out and talks, I'm sure the markets are going to shake up a little bit. I don't think we're going to have another inside trading day, but if we do, that thing is going to be coiling very tight for a potential big move here in the very near future, and that big move could take us to the upper end and or the lower range. So what do we got to wait for? Well, we got to wait for a break of the low or a break of the high, and that can determine where the market might be headed here in the very short term. If you take a look at the 15-minute time frame, you can see price action is tightening up. It's coiling, okay? So it's getting ready to make a move here. It might happen in the after-hour session, right? We've seen that countless times. You can see the volume shelf profile here. That can act as a magnet, which can bring bring price up. And you can see here we're doodling around with another volume kind of shelf profile right there. We are holding nicely above that 5-day moving average, so that is a positive sign. The longer we stay there, the more flat this will get. So yeah, I mean, it's very hard to determine. I say if we start taking out that 176 or start taking out this 5-day moving average, that we go fill this gap and potentially head lower. But we got to look for that crack above 180. So as it stands right now, we're just kind of in limbo, waiting for something to happen. Let's take a look at Bitcoin on the daily time frame. So Bitcoin on the daily time frame, we're floating around 30,000, right? We cracked down to 25. All right, it was a very extreme move, right? We heard about the Luna thing, right? They had to sell, well, it was a 30,000 Bitcoin, and this is a big sell-off. So now we're starting to understand why it happened, right? But what's interesting about this is we saw this happening before we really even knew what was going on behind the scenes. And now that we know, right, then the narrative changes, and people are saying, hey, it's being that it's still above 30,000 and they sold off 30,000 Bitcoin, that's actually a good thing. Look at, I'm not one in to meet all these narratives. We saw the chart, we saw it coiling up, we saw and we said that it's going to be potentially making a big expansion type move, and it did. It happened to be to the downside, unfortunately, and it wiped out just a lot of market capitalization. As it stands right now, right, we had this nice big long bottoming tail, a lot of volume, and we're starting to bounce up. This could very well be forming a bear flag, which could indicate we have more downside, but this thing could doodle. Right? It could doodle up higher and higher, and we'll see in the very near future. But I just wanted to call out, it is kind of flagging. Now, I want to hop into a couple other charts here for Bitcoin. This is on the weekly time frame, and I want to just point out a couple of things. You're going to see some green squiggly lines. Green squiggly lines and the red squiggly lines, these are known as anchored VWAPs, okay? So it's average weighted price and volume, or volume weighted average price, which basically means... Well, I'm not going to, it's not going to be an introductory video on the anchored VWAP, but it is very good for finding specific key levels of support and resistance. And what I'm doing here is I'm nailing the tops of these right here, and I want to show you why. First and foremost, when we broke out of this symmetrical triangle right here, okay, I anchored the VWAP right to it. And what you can see here is, look at the average, average weighted volume and price, you can see is bouncing from that level. But when it cracked down through it, we saw a significant flush. Where did we flush to? We flushed to the anchored VWAP that's tied to this pin right here, which was that little peak, okay? So what I'm thinking is if we take out 26,235, that then opens the doorway to potentially lower. Now, where can we head that's potentially lower if that low is taken out? Well, I anchored the VWAP to this peak over here, and that brings us to around 17,329. But there's a couple other levels that we can take a look at. Like, for example, 20,000 is a key level. That just matches up really right here with this previous peak high. So if it comes down there, we can see a bounce. Now, can it be perfect hit, right? Maybe, but we've always seen like flushes down. So I would say keep close eye on that 17,329 if you're being very aggressive, if the price were to come down into that region. Now, another lower level to be mindful of is the one even farther below that. If these all start to give out, I am just connecting this high right here, this high right here, and then these little peaks right here. So it's clearly we got above it and kind of faked us out, but there's clearly resistance, resistance, and resistance, and once resistance is broken, it can become support. And we've never back tested this level. So that right there is at 12,009 or 12,000 if you just want a round number. So if it comes, I mean, that could take a while to get down there, but that's always a possibility in the realm of things. And now another chart that I'll show you here is the monthly time frame. And this is of just Bitcoin on a log chart here. And what I want to call out is you can see it's just been in a nice clear trend. And I've pointed this chart out before. And what I wanted to call out here is back here, remember we cracked this trend line, but this is when the Fed stepped in and did unlimited QE. Well, now we're breaking down it, and they're saying that they're going to be tightening, right? And we talked about this, actually, I even posted on Twitter before we cracked, and we showed this bear flag, right? And we just said, hey, a full measured move could bring us down to 2,250. That'd be worst case scenario. Now, there's a couple ways you can measure a full move. I just took it from the price here to the price down here. That's the pull. And then I took that dollar amount and I basically just took it from down there to down here. Okay, so that's all I did. And that brings us down to 2,250. Now, you might be thinking that's never going to happen. Yeah, right. That's like absolutely crazy, right? And I kind of agree. I'm not in the camp that that's going to happen. I do see the possibility for more downside, but I want to walk you through this, and I've walked people through this before. But understand this, like we just hit from peak to where we are now, we hit below like more than minus 56%. So we're floating right around minus 56%. Okay. Down here at 20,000, that's 70% down. Okay. At 12,500, that is 82%. You might be thinking, no way it's going to go down 82%. Well, I want to just remind people that in crisis, in crashes, we have seen this happen, not just with like Bitcoin, right? So we've seen big moves down on Bitcoin, but we've seen it in some very big stocks. And I'm telling you this not to make this similarity, but to tell you the possibility that things like this can happen. So for example, Amazon, right? In the .com bust, Amazon went down 95%. All right. And a lot of people are talking about this Bitcoin bubble or crypto bubble is very similar to the tech boom. And the thing is, if you are prepared and you're ready for the opportunity and you're not destroyed on the way down, but you're a bit able to take advantage of these technologies in the early stages or infancy where you can potentially see huge moves after a big fall. Like imagine taking Amazon here at $6.25. You know, a lot of people lost a lot of money here. Who would want to actually invest down here? Well, people that were prepared and saw that opportunity, right? Well, it wasn't just Amazon. Look at McDonald's. McDonald's during the .com bust was down 75%. So we're looking here at Bitcoin. Bitcoin's only down 56%. So to think that it can't go down 80% or even more, you know, is kind of ludicrous in my opinion. So not to say that it is going to happen, but you gotta keep that in the back of your mind. All right. So that is what I'm showing you now. How do we prepare for the next bull market? Me personally, I'm going to be paying very close attention to the Saylor to Schiff tool, right? I have a strong feeling that we can get some more whipsaws in the near future. It's still not pointing up. It's not above the zero line right now, but when it does give me that buy signal, I'll be letting everybody know. Eventually, it's going to catch a nice bull run. It's done it before, and it's also protected us from falls, right? So this green line right here, we caught the run up. We actually caught this entire run up, right? It gave a green line. I have to go back more to show you, but it caught this one, it caught this one, but it saved us from this downfall. It saved us from this downfall. It saved us from this downfall. So right now, we just got to be patient. We got to be patient and kind of weather the storm. Hope that helps out, gives you some insight. That's all I got for you on today's episode, everybody. See you later.